Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we're happy to have you with us today. As always, I have my great friend. He's the smart guy of this operation, Mr. Al Connickson. How you doing, Mr. Al Connickson?
I am doing very well, Josh.
You actually,
David, how are you doing?
You kind of got a new name today.
Almost, yeah. I'm kind of happy with the original one, so
we'll
I think I'll stick with that one.
We'll keep it there. It's always great to be back, helping our Retire Young family make better investing decisions. Al, once again, we had another great week in the markets. We had a lot of movement, some great movement up. There was also some pretty good movement down. And that's a lot of things that we're going to talk about here today. Multiple directions, trading and investing in these financial markets. Now, when we talk about the financial markets, that is the whole market, the stock market. That's what everybody knows. There's other markets out there, the futures market, the Forex market, and options. So, Al, before we get into these other asset classes, let's talk about how the smart money really moves this market. And then let's also recap kind of what's happening, what could potentially happen here in the future as well.
Yeah, well, what's really been driving these big movements up and down that we've been seeing are really two primary things. One is the coronavirus issue. You know, where's the vaccine? When is it coming? We're getting, we've had some increases in numbers of coronavirus. That's impacting the market. One day there will be something that will be negative that will drive it down. The next day it might be a positive comment. And then the other thing, of course, is what's happening with the stimulus, the Fed, deciding which way to go there. So those have been the two big movers. You know, and the great thing for us, Josh, is that regardless of what's happening out there, we're seeing these big moves up and down. The good thing for us as traders is that the prices, whether they're going up or down, are just moving quicker into the zones that we look for, what we would call a buy zone or demand zone or a sell zone or a supply zone.
And that's a good thing, too, because a lot of people are afraid of quick movements. You actually want that as a trader or investor.
Exactly. Yeah. If you're a trader or investor, that's exactly what you look for. Volatility becomes your friend. You know, and there's really two primary questions that every trader or investor needs to answer, Josh. One is, what to buy and when to buy it, and the other is what to sell and when to sell it. And both of those require knowing when to act before price moves. If it was going to move up, you want to know when it's going to start moving up if you're a buyer before it does. And then before you start selling, you want to know that there is a certain price at which that's going to happen. How does that happen? Because that really what we're talking about is timing the activity and the turn in price.
Sounds like it.
Yeah, it more than sounds like it. It actually is that. And we are able to do that, fortunately, because the people that are moving price, the activity out there that's causing price to go up, causing price to go down, is something that we can identify. We teach people how to read a price chart where they can identify when that is going to happen. Fortunately for us, the people that are really driving the price, controlling the price, they leave footprints in the market, things that we can identify on a price chart. And the key really is identifying, again, the beginning and end of basically what becomes a trend. And you've probably heard, or people have heard, follow the trend. The trend is your friend. Ride the trend. Basically, what they're saying is that as soon as the price changes direction and then goes to a certain level, that's a trend. And to really maximize the value of that trend, it's ideal to get in at or near the price turn where the trend starts and then know where it's going to end, because that determines then your profit potential. The problem, Josh, is that most people don't know how to do that. They don't know how to identify the start of a trend, the end of a trend. Oftentimes they'll get in at the middle or close to the end of a trend just when it's ready to turn and go the opposite direction. So our goal is to help our students maximize their profit potential by identifying the beginning and the end. But also, if you do that, if you can take a position at or near the turn in price, that happens to be the point at which you have the highest probability of that working in your favor. And as it turns out, also beneficially to us, it happens to be the lowest risk point to get in at any particular time.
Yeah, just explain a little bit more. You mentioned the footprints. I mean, the smart money, the big money is what's creating these big moves, right?
Correct.
Now, you're talking about reading a price chart, not analyzing earnings and all this fundamental information, stuff that you can find for free on the internet, right?
That's exactly right. And the point there, Josh, I'm glad you brought that up, because That's what Wall Street tells most people to do. Look at the fundamentals of a company. And you're right, it is all public information. By the time you see it, by the time you analyze it, what do you think has happened to the price? If you analyze something that looks really good, don't you think the institutions already have made their play? Because they get that data long before we do. Sometimes they get data we don't even get. So instead of waiting until something happens, why not participate before it actually happens? And you do that by following these big players, following the people that are changing price, are moving price, either changing direction or continuing to move it in a certain direction. And that, again, is reading a chart. And the reason that we can do that is that the institutions trade with such large quantities. A major firm, for example, wouldn't buy 50 shares of Apple or 100 shares.
Probably not.
No, they might buy close to 1 million shares. That's enough to really move the price. In fact, it moves the price too far away from what they want to pay, so they don't put all the trade out at one time, or they put a limit on it. So maybe they only get a few thousand shares filled at a certain price, but they know what the value of that company is, whether it's Apple or whatever it is, or the market in general. So they'll wait until the price comes back down to the level that they feel is of value. Then another part of that trade is put into play. That's what we do. We identify that initial move and then help our students be positioned to take advantage of the next move that the institutions are making. And in fact, it really is more beneficial because you are in the trade. You're set to be in it. And then the institutions come in and they help provide a profit for you.
Yeah, you went over a lot of information there. And the key thing is for us as average investors, it's just to trade like that smart money and wait for price to come to you rather than wait for price to go further and then get in. And I want to talk about one thing real quick here. We talk to a lot of people, and I mean, even a lot of friends that I talk to, people say, I just don't know how to trade and invest. I just, how am I supposed to do that? Well, that first step is acknowledging that. Then you have to take that next step, which would be getting some education, learn some knowledge, learn some skills, really learn how these financial markets work. I mean, trading and investing is like anything you've done in the past. You have to learn it. Al, coming up at this next segment, I want to talk about how the smart money is creating income. We see a lot of people wanting to understand how the smart money is doing that. We'll be right back.